Hello, everyone. My name is Daniel Guerrero.
And I'm Daniel Saldivar,
I'm Susanna Duran.
and this is our Finance 120 2021 Stock Track Investment Challenge.
So, the introduction. So, students were asked to participate in a simulation of the stock market, which is known as stock track. There were some limitations to this, however. Each group of students was given $100,000 to invest, and that was the maximum. There was an option for another $100,000 for those in the form of a loan. They were allowed to invest in any stocks or ETFs they wanted, and a lot of the big name stock exchanges like the Nasdaq, the New York Stock Exchange, etc. Um, there were a maximum amount of 200 transactions, which allowed buying and selling of stocks and ETFs. And no single positions could be worth more than 25% of your portfolio. These rules were put into place to make students think more wisely about their choices and to come up with strategies to make the most in a limited amount of time.
There are many investment philosophies and strategies that can be used to make investment decisions. We have found a balanced philosophy to be the best fit for our group. We were all new to investing, so a balanced strategy allowed us to gain experience investing in both high risk and low risk stocks. We bought some safe stocks such as corporation. Investing in safe stocks promised us a profit. We also decided to step out of our comfort zone, invested in some high risk stocks such as Advanced Micro Devices Incorporation. Investing in these types of stocks was definitely a gamble, a very good or very bad outcome. The strategy we used to select stocks was doing some research and checking the 52-week chart. This strategy helped us learn more about the company's past performances. If we noticed a company had a 52-week high, which was larger than the 52-week low, we considered investing in that company.
Now, on to our trading diary. So we bought 11 different stocks. All of our positions were left open, so these numbers reflect on and are based on the holding and selling each stock after just 1 week. So our biggest takeaways from our 11 stocks were our biggest losers and our biggest winners. So let's start off with the biggest profits. That one would be the first one would be Nvidia. We bought 9 shares at $505.69, and we sold it at a profit at $552.49. And the percentage after just 1 week was 9%. And next up, we have General Motors. We bought 40 shares at $55.85, and we sold it at $57.48 for a profit of 2,312, which is 3%. So our biggest losers were our ETFs. So the first ETF that we had was SPY. It's an ETF that reflects on the biggest stocks on the S&P 500. We bought 20 stocks at 392 and 51 cents, and we sold it at 389 and 70 cents for a total loss of 7,794, or 0.72%. Our next ETF that we invested in and we made quite a big loss was QQQ, and that reflects on the biggest stocks in the New York Stock Exchange. We bought 20 shares at $312, and we sold it at 311. So the total loss for that was 6,226, or 0.62%.
Okay, so now portfolio performance and evaluation. So the most basic performance indicator of our portfolio would be the returns that we received over the time period of the assignment. Our portfolio managed to have a return of 0.56%. In comparison, the average return of the S&P 500 index during the same period of time was 1.05%. This indicates that we were not able to beat the market. Other performance measures for our portfolio include the standard deviation, the beta, and Sharpe ratio. Standard deviation measures the probability that the return of a portfolio will be within a certain percentage range. In the case of our portfolio, we calculated a standard deviation of 23.9%. A way this can be interpreted is that there is a 68.26% chance of the actual return of our portfolio will be within 23.9% of the mean return of our portfolio. This is a very high standard deviation and tells us that our portfolio is very risky. Beta is a measure of systematic risk. When the beta of an asset or portfolio is equal to 1, it means that the risk of that asset or portfolio is equal to the risk of the market. A beta less than 1 means less risk, and a beta over 1 means more risk in comparison to the market. Our portfolio has a beta of about 1.15, indicating it is more risky than the market. The last measure of performance we will use is the Sharpe ratio. The Sharpe ratio explains how much more you can earn on a return for each standard deviation of that return. The higher the ratio, the more attractive it is to investors. Our portfolio has a Sharpe ratio of negative 0.048%. Our ratio is negative because of the fact that our expected return is less than that of the risk-free rate that we use in the calculation. Our Sharpe ratio would make our portfolio look way less than ideal to other investors.
Overall, this stock track competition has taught us many valuable lessons. As first-time investors, this competition has helped us learn how the stock market works. We have learned that the stock market is very unpredictable, especially during the pandemic we're going through. The market has been changing uncontrollably. The biggest lesson we learned is to do research before investing. We have learned that doing research on the company is necessary, especially when you are not familiar with it. It is also important to view the company's stock history to have a better understanding of the company's performance. Dedication is another key element required for investing. It is necessary for investors to dedicate time to their stocks at least once a day. Stocks change drastically, and you always want to know where you stand when it comes to investing. If we were to invest in real life, there are a few things we would do differently. First of all, we would dedicate more time to investing. We would have a minimal 1 hour daily time frame for researching, investing, trading, and so on. We would also take more risks. As you can see from our portfolio, we had a 1.496 beta, which isn't very high because we did not take many risks. We believe we have gained the confidence and experience to invest in the stock market. Thanks to the stock track competition, we now have an idea of the basics of investing. Thank
And
you.
that's our presentation. Thank you.